Well, one of the investors profiled in The Big Short is not worried about the size of the budget deficit. Steve Eisman is host of the Real Eisman Playbook podcast. He's former senior portfolio manager at Neuberger Berman. He joins us here on set. Steve, you said this before. It doesn't matter. People have been railing against this for decades.
40 years.
40 years. When do you think, will it ever matter?
You know what I got to say about all this?
Well,
just stop. For God's sake. You know, I'm going to say this. Maybe it's a little too obnoxious,
no,
but I can't help myself because it's just so. How many times I can ask you this question? People want to be me. They want to predict the end of the world, and I have a news for all of them. The position of Steve Eisman is taken. And
by an optimist.
By an optimist.
Go figure.
I don't know how to say this more ways. The world functions, put it this way. There's a great slogan that says that I think really applies to politics and international affairs, which is when someone tells you who they are, believe them. But in the market, when someone tells you who they are, don't believe them and they actually do something with their money. So all the people who are pontificating about this, what's happened to the price of this risk is a 10-year Treasury yield. Right. And what's happened to the 10-year Treasury yield? It's been directionless since December of 2022. So the more important question is, given that all these people are pontificating about it, why hasn't it moved? And I think the reason is there's no alternative to Treasuries. So if there was a real alternative to Treasuries, then all of this stuff about the deficit is something that I would pay attention to. But as long as there's no alternative, there's nothing to talk about.
So if there's no alternative, well, let's put it this way. So if we don't think there's going to be a Treasury blow up, it means that generally that the equity market is just expensive. And so talk about that, because clearly you're right in terms of where we've been. But that's not
something I even pay that much attention to.
Okay, so valuations don't matter.
It's not that valuations don't matter. They always matter in the long term. But, go back to when people really complained about valuations, the internet bubble. So people shorted internet stocks and got carried out. What broke the internet bubble was not valuation. What broke the internet bubble was a recession that caused some of these companies to go bankrupt and to do badly. So, look, the U.S. economy, in my view, is more dynamic than it's been in my lifetime, maybe in many lifetimes. So until there's something really bad happening, like a trade war, which is still a possibility, valuation is not something I really pay that much attention to.
In terms of foreign investor perception of the safety of U.S. Treasuries and confidence in our assets, are you concerned at all about President Trump appointing a new Fed chair who will be perceived as some sort of a puppet, questioning the independence of the Fed, and so therefore investors lose confidence in Treasury? It might not be the deficit. It might be this.
I understand. Look, I think the institution is stronger than the person when it comes to the Fed. The President of the United States cannot fire the Fed chairman. He can put someone in there, and then once that person's in there, they'll do what they want. And President Trump can complain all he wants, so there's nothing he can do about it.
Would it make a difference to you if they changed how they refinance? We saw they were going to do auctions, not going to change. But in the future, Besson has sort of hinted that maybe there's some significant change. If they don't do coupons anymore, would that make a difference to you? Just to all short?
I think the demand for treasuries on planet Earth is pretty insatiable. You could change this, you could change that. At the end of the day, the auction will be fine.